Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday, the 13th of November. Unlucky for some. Starting off with 7 Digital, where it looks as though after months of consolidation, the shares are finally ready to bounce, waiting for an end-of-day close through that August resistance line from the extended falling wedge that we've had there at 1.2 pence and the 20-day moving average at that level. Above the 20-day line, looking for the 50-day moving average as the initial target there, 1.57. Obviously, fans of the shares waiting for a retest of August resistance near 5 pence. Stop loss, obviously, at the moment down towards the 0.8 pence level, which is where the 200-day line is, and also that support line from August. Mining minnow next in the form of Bezant. Here we've had a situation where the shares have found multiple support points there at the 30-day moving average, currently a quarter of a penny. While we're above that, looking for a retest of 0.54 resistance from last month. What will probably seal the deal would be an end-of-day close back above the initial November resistance at 0.35 pence, so above 0.35, looking for around the 0.55 pence level, hopefully by the middle of next month. Interesting situation at Braveheart, where we had an initial flurry for the shares, still up on the day, but waiting for an end-of-day close above the 20-day moving average at 44 pence to give us a retest of this month's peak, just above the 70 pence level, hopefully on a one-month view. The upside argument valid while we hold above the 50-day moving average, currently at 35 pence, and that's a stop loss on an end-of-day close basis. On to Baccano Lithium, where we see that the shares have broken recent neckline resistance at 33 pence, so an end-of-day close above that. Hopefully we'll get a retest of the October peak at 39 pence. Big target here over the next 2 to 3 months, hopefully up towards the top of the December trend channel from last year at 55 pence. Only back below 30, really delaying or killing the upside scenario at the moment. More obscure stock is up next. Enwell Energy is the name, and looking for an end of week close today above last month's resistance at 23 pence. If we can get that, then we're looking towards the December trend channel top from last year as high as 37 pence, hopefully over the next 4 to 6 weeks. Upside argument really valid while we hold above 20 pence at this stage. Normally a good sign when you see a stock or a company which had a placing where the shares go up in the wake of the placing. So we've had that with Gunsynd. Shares breaking above the 50-day moving average at 1.08, and above that really looking for at least a retest of the September resistance zone towards 1.5 pence. 2 to 3 month target here up towards 2 pence, which is the top of a rising January trend channel, and really the upside valid while we hold above the 1 pence level, which is obviously the level of the latest placing. On to Galileo Resources, which is being toing and froing between the 50-day moving average at 0.78 and recent resistance just around the 1 pence level, looking for a break of that May resistance line. Let's call it at 1.05, so an end-of-day close above that, and we'll finally hopefully get the 1.6 pence target over the next 2 to 3 months, which we've been promising here for quite a while. At this stage, only really back below the 50-day line at 0.78, delaying the upside scenario, and ideally now there's no break back below the 20-day moving average at 0.86. Ntech is next, and this is an interesting situation in the sense that we've had one of the better type of setups that you can have, which is a narrow bear trap. So the low there in August 11.5, the low for November 11, so just shaking out the bulls and then back up again. What's also of interest is the way that we gap down to deliver that bear trap and then have pushed up very sharply today. That should mean that while we're above 11 pence on an end-of-day close basis, we have an initial target there at the 200-day moving average at 14 pence, but more excitingly, up to the late April resistance line projection at 24, hopefully over the next 6 to 8 weeks. So let's see how that pans out. It looks like a reasonable risk-reward situation. Remote monitored systems is next, and Here, wonderful bear trap rebound, sort of double bear trap rebound we had for the shares, just off or just below the 50-day moving average at then around a penny, and former resistance around 0.9 pence. So 0.9 pence was the last peak there in October, and that became support this month. So that's a nice technical event. Current situation is, or current view is, that while we're above yesterday's high at 3.5 pence, on an end-of-day close, we should be able to retest the 5.8 pence peak, the initial peak for November. And obviously, the company saying that it's fully funded helps the cause of the bears no end. On to Safestay, which has been motoring today. We had, I suppose, that final bear trap actually in the end of last month with the 10 pence low versus the 10.1 pence low. So those things are important from a technical perspective. Today we've had a gap through the 200-day moving average, which shows that momentum is building, and really the view now is to try. Well, the aim now is trying to find out where the stock may go. At this stage, it looks as though we could hit that line of resistance that I'm drawing there from March at the top of the broadening triangle. This stage already back below 15 pence on an end of day close, back below today's gap floor would really delay the 35 pence target over the next 1 to 2 months. Ideally, we have a nice weekly close above the 200-day line today. Just a couple of stocks to go now. Very pleased to see that Synergen, or Synergen, is back in form. We've actually had, I suppose we had a 2-3 day bear trap from below the 200-day moving average, now at 101. That was there was also a bounce off the rather obscure August support line there, just below the 90 pence level. So that sort of worked on a technical basis. View at this stage is, at least while we're above that initial rebound that we had up to £1.24 after the Monday crash, i.e. on Tuesday, we should see higher prices. The favoured target here, probably as a best case scenario over the next couple of weeks, would be a meeting with the 50-day moving average at £1.70. Otherwise, we're looking for, I suppose, the late October floor at 156, but hopefully 170 is the best case, 156 less so. What would really help the cause, I suppose, today is an end-of-day close above that late September peak at £1.35. So we get that, then hopefully 156 should be on the way relatively soon in terms of days after that particular event. Finishing off with a stock which went through the roof yesterday, and might have left some people thinking that was it. But the stock Victoria Oil and Gas managed to solve a dispute, which is rather rare as far as the stock market is concerned. We had a target, a best case scenario target around 6.25, something like that. That's been more easily beaten so far today, and the view is that while we remain above 6.25, we might just be treated to another fresh target, another decent target there, up to about 11.5 or maybe even 12 pence over the next 2 to 4 weeks. But above 6.25, at least the upside should be maintained, even though we've obviously come back a long way. That's it from me today. More updates possibly over the weekend.